Hello and welcome to Commodity Champions. I'm Manisha Gupta, and the commodity market saw a host of notifications from the Finance Ministry last week. The big one being the 20% hike in import duty of crude and edible oils. The move may lift retail prices of edible oils, increase the prices of food items in eateries and dampen demand. It could also subsequently reduce overseas purchases of palm oil, soya oil and sunflower oil. However, it comes as a relief to Indian farmers as it could prevent imported oil from undercutting domestic prices. I was at the Globe Oil India conference, which focused on navigating a future for edible oil in the terms of innovation and sustainability. On the sidelines of the event, I caught up with various industry veterans to gauge the impact of the import duty hike and, of course, the Indian demand and consumption numbers. I spoke to Dorab Mistry, Director of Godrej International, Sudhakar Rao Desai, CEO at Imami Agrotech, and Somnath Chatterjee, Head of Procurement and Logistics at ITC's Food Division. Let's listen in.
Many congratulations to the Government of India for finally agreeing to raise the duty and thereby doing something, giving confidence to the soybean farmers. And I tell you, the collateral benefit of this will be that if the soya farmers achieve better than MSP, it will give confidence to the mustard farmers to plant more mustard. So in fact, you are going to get two results for the price of one, literally. So that's a very good move. In my opinion, the consumer will have to bear with slightly higher prices, but it is a burden worth sharing. Agriculture is very important, and we were too much import dependent. And for that reason, I think what the government has done is quite correct. Looking ahead, we were expecting that out of the 22% higher duty, some of it would be absorbed by the producing countries because their markets would come down, and half or more would be absorbed by India. But to our surprise, the market is so strong, the sentiment, particularly in the palm market, is so strong and so solid, and the players are so well funded. Because remember, the palm players are some of the biggest players. They are vertically integrated from plantation to refinery to oleochemicals. So they are not short of a bob or two, and they can hold their stocks. There is no compulsion to sell. So they have managed to hold on to the prices, and when they saw that prices were not falling on the day after the markets opened, then the speculators jumped in, the futures traders jumped in, and they have been taking the market higher. So unfortunately, the Indian consumer is going to bear the full effect of the 18,000 rupees by which the duty has gone up, and maybe even a bit more. And for that reason, I feel that at some stage, maybe not now, but after Diwali, Indian consumption will shrink. India is the classic price market. I mean, Indian market, if you take tier 1, 2 and 3, tier 2 and 3 are definitely price sensitive. And this price rise is too high. So if Indian consumption declines, Indian imports decline, and the peak production season continues, peak production is September, October, November. So stocks will build up in Malaysia, Indonesia, and that could lead to a correction in the market. I am hopeful that that will happen.
So when it comes to palm oil production within India, what kind of numbers are you working with in next 5 years?
Well, the numbers are very optimistic because there is a lot of planting taking place in the northeast. If this planting was taking place in Andhra and Telangana, I would almost guarantee that the numbers would be achieved, and India would be producing 2.5 million tons of palm oil by, say, 2032. But in the northeast, it's a big question mark as to what the productivity is going to be. The jury is out. And you know, palm is a long gestation crop. You don't come to know the result for 5-6 years. So I think we have to wait and see. But 10 out of 10 to the government for trying, setting up the mission, investing the money, and the private sector also putting its heart and soul into it, for sure. I am more optimistic on mustard because we have actually shown and demonstrated that in the last 5 years, our production of mustard seed has gone up by whatever figures you take, 3 million tons, 5 million tons, and it's a quantum leap, up by almost 30%. And the scope for switching from wheat to mustard, now the Bureau of Agricultural Prices has confirmed that the profitability of mustard and wheat is roughly the same. So there is no reason for the intelligent farmers of Punjab, Haryana, Uttar Pradesh to switch. So if they do, then I think the scope for mustard, and not just sarso as we call it, but 00 rapeseed oil, which is a much blander form of rapeseed oil, but a higher oil content, if that can be introduced, and that can compete with soybean oil in the local market.